All right. What's up, traders? Okay, so we're going to talk about this trade that we took early on the last day of Friday. On this strategy here that you're looking at these bands. This is actually the VWAP um, indicator. It kind of helps me a little bit more on my ICT hybrid. I don't use 100% IBC. I use a kind of like a hybrid, because I mix it up with a couple of things just to give me some more confluence so I can enter in into trades and maintain long. But you can see here, this blue line is the average line of the VWAP. You can always study the VWAP. So what this helped me, it helps me to stay disciplined and wait for the proper time to entry into the market instead of like, oh, it's going down now. I can go down and sell off, and then it's about to retrace. So what we want to do is, if this is still a bullish market, um, if this is still a bullish market, actually, I don't really need to be off for right now. If this is still a bullish, bearish market, I mean, then we want to see if we can target these lows here, um, somewhere that low, or pick up this fair value gap somehow, right? So just put that there. Let's kind of increase it a little bit like that so we can make sure we can get this fair value gap even tighter right there. And then let's stretch it out. Always do this 500. Okay. And then I call this, where's the 1 hour fair value gap right there. So it changes that color. All right. So, or this low. So um, you can either hit here. One thing about ICT, the 50, right? So that's what we're looking at. We're looking for complete a slow pullback for this week, but to then take it higher maybe next week. So we're looking for a complete pullback. You know, it's kind of like in there a little bit. Um, so so that's our whole range. So getting somewhere down in this area that where we can see higher placements on Monday, right? So we're looking for Monday to be bullish. Really, it's kind of like a sideways move, slightly bearish on this. Maybe to trap some traders in that was trying to go long early, but caught them in there. But but this is what we're trying to do. We already can see that our trades are already at the top of the fair value gap that happened all the way on the 10th, I believe. I think that's the 10th, the 15th. Okay. So we want to get into more of this feel of that, or at least potential this target before it breaks up higher. So go back down to this 5 minute, and what I want to see is, I want to see price. So we got this here. So if we want to push a little further down, we got some fair value gaps that may pose us some profit. So going down, we got this one on the 5 minute. It's very tight. I use this, guys, for the imbalance, just so it can just quickly highlight a fair value gap. Because mostly you probably wouldn't have saw this if, right, if I didn't have that on, you might not have seen that. So that's just to help identify some fair value gaps, right? So we go here, right there. That's a really tight window that has a potential of coming back and filling. So then what I want to do, I use the Fibonacci for the potential pullback areas, right? So the last swing high. That's what I want to come back into. Other studies for that later on. So what I tend to do is, if I have this fair value gap squeezing in here, I want to see, I believe this market is going to continue to go down some more, because I want this to at least be a run somewhere around my fair value gap, right? So let's get another 5-minute candle there, right? What I'm looking for, and this is how you can kind of see that what ICT talks about, how the market is fixed, is actually really fixed, because we want to get another 5-minute candle. Okay, we want to take this to the tip, right? And we want to see our trades beginning at the 8-hour and catch it somewhere between 11 o'clock. They're not going to let me get it for right now. So just keep on moving. So let's take it all the way up to the 8 o'clock, see where we at. Okay, so by 8 o'clock, this is where we at, right? So we did get a little further down in there. Now, since it's pulled away and it's starting to come up, this is when I will use my the indicator for the VWAP, right? So you go down here, put in the VWAP indicator, right? So then now, what am I looking for? What am I looking for? So it has the VWAP image is all the way up here. So that means this is not my target area, because it's up here. I want to be selling when it gets here. So this what has helped me to see it. Okay, that can't be the target. So where's my target? Let's do a little refresh, because I want my retracement to be, how about that right there, guys? How about that right there? Right? The blue line is going under my 90, which is good. That's what I wanted to be. See, because here it's not a 90% retracement, even though so it'll go past it, so it'll be above that. I will want the 90 to be here. I don't want it to go past that, but because the blue line is above this one, then I can see this as my potential high that it doesn't want to interfere with. And this is what makes um this indicator valid for me, because it gives me a general idea of what I want to work with. So we got that, right? So let's go play. We're now in the 8 o'clock zone, right? We got a little more, we want to take that trade somewhere in between here and there, and we want it off the blue, right? We want it off the blue. Okay. Okay, so now as we're approaching, where we at? Let's kind of stretch this all the way to there. We want it to at least hit the blue or our 90 or 88% retracement. The 88 is the black, the 90 is the purple. Um, so actually, I forgot one step, guys. So that wasn't our fair value gap that we was actually looking for. Because ICT talks about that as well. So it wasn't this one. So let's take this one off. I believe as we approaching, right? We got that. We should have somewhere in this 80 and 90 a fair value gap. Let's see. Let's open it up. And that one is very skinny. That one is very, very skinny, but it's there. See that right there, guys? This bottom of this wick. See that right there? That's a very skinny fair value gap, but it's in there. So we got to mark it out. And it's right in between our 88 and our 90. So that's just where we want to become sellers, right? That's where we want to become sellers. Let's get a nice big area for you guys so you can see that. It's right in between our 90. This is one of we want to become sellers. Confirm it to bounce right off of our so normally you'll see that. Boom. Check that out. It hit this, but again, you wanna either notice how it crossed over but it stayed below. That's giving us another strong indication that we're going to be selling off, and it's not, going to continue to go higher. But we do want to see this fair value gap break as well, right? And this is what helps us stay patient, because in trading, patience and timing is the key, right? No FOMO. It doesn't do what I expect here, then there's no trade. Then we just wait. There's something else if we're going to be buying, right? So there you go. Look at that. Boom. Next candle. We're in. The full of the body stayed under the the VWAP average range, right? So from this point on, now we're looking for targets. Where do we want to take our take profit, right? We always want to be entering here. Well, in our scale, we got this here. Let's get our shortening tool. We want to put it at the 88. And if it comes this high, we want to be out. So we're going to risk 26 points, $26. And we want to at least take partials here. So that's looking at 165, right? We want to take at least 80% off at this point. Let's say that you're running with a fresh, brand new 200,000 my forex fund or FTMO account, 200K, right? And let's get the calculator out. And you're risking 1% per trade, right? So that's $2,000, right? We saw here that we'll divide that 2,000 before the 26, right? So it's telling you can get into a 76 lot size. So pretty much, so every dollar that it drops down, you're making 76 bucks. That's pretty much what's going on, right? So it says our first 80% will be at 165. So you'll take the 76 times 165, I mean, right? Times 165. That's a grand total of 12,550, but we're going to take 80% off and clock that. So you're clocking 10,032, right? And you'll leave the rest on for whatever the next profit target is. And that's what another thing with these the bands of this VWAP is letting you know that, hey, we can actually really take our first scaling here and leave the rest running to whatever this comes up to be on this one here. But we can actually take our first take on here, but we're just going to lose where the low is, where we got where all the um the optimal trade entry was formulated, right? There's other little things you can do. It's the Fibonacci extension. But right there, we're going to do that. So now let's play the tape. See, do we get stopped out or do we make money? Right? Let's play the tape. Okay, we're running, running, running. Came close to it. Boom. Right there. So it took us, let's measure this out. We got in here. So it took an hour and 35 minutes to make $10,000. This is what happens when you have patience. You backtest your strategy and you see what it works and what not, right? So it takes you an hour 30. You made money, you're gone. You're off the chart. You take their 80 and then you just bring your stop loss over the next previous high. So this is where your stop loss will be, right? And then you can take your rest of your 20% down to this level right here, which is an additional 230, 223. So you go 223. Remember when you only got 80% running, so 76 times 80%. You got, well, let's go 76 times 20. What's left? So you got 15 still running, right? That 15 is going to pick up an additional two. That 15, my bad, actually started from here, and you wanted to keep it going to here. But of course, you bring in your stop loss there, right? Or where was it? Oh, it was to the red line, to the red line. And we just want to bring it there. It fills that whole fair value gap. Just do the fair value gap, right? We don't want to be greedy. So that's 258. So 15 times 258, if it hits that, you pick up another 38.70, right? For a nice day of 13, which you was at 12,000, could have took to 80. But if you would have waited that whole thing and just say, okay, we're not going to take any partials and we just go $76 and we coming out here to the fair value gap, that'll be 258, and that's when we get out, you made $19,600, right? That's what it is, guys. I'm an accountant, so to me the numbers got to make sense. But our stop loss will be there. We'll bring the stop loss up to that point. So let's see um when these final minutes what would have done if we would have continued on. Boom, we would have got stopped out. We would have brought our stop loss, so wouldn't have made all that, and then we didn't take our partials. You see why taking partials is good, right? So with that being said, guys, hit that like button, hit that subscribe button. I'll be doing more of these videos as it comes along, and to break down these trades. Peace.